And we're live. Hello, everyone. It's Brian with TINYCRYPTOBLOG. This is the weekly recap where I go over the big points and the big picture that popped up during the week. Touch on them a little bit. Today is Friday, January 5th. Hope your new year is starting out well. This week, going to do a quick prices recap, Bitcoin ETF, institutional money this cycle, and then anything else that pops to mind. So let's get started here. We had prices recap. We had pretty hefty flash crash this week where price of Bitcoin was in the low 40s, uncertainty with the Bitcoin ETF approvals coming, had a big spike. Maybe it means it's happening. And then lo and behold, we had a drop, sudden drop, 45 down to 42. My guess was there was probably a buy-in, profit taking, and a slight upward bias. So the rest of the prices in the market, pretty much the same, sideways. The big anticipation is going to be that Bitcoin, those Bitcoin ETFs. So we'll see how that unfolds. Next on the list, since we're going into it, is the Bitcoin ETF, stop or go. This is the first window where if there's going to be an approval for a Bitcoin ETF, it'll be this week. Will it happen? Will it not? Are there more filings? We don't know. There's no hints. There's nothing coming from the regulatory side. It's all up in the air. And just like 2023, lots and lots of waiting, no matter what it is. In this case for this, lots and lots of waiting. How will this affect coin and token prices? It's up. It's down. We don't know. If you're someone that, the price is a big deal, not an easy time, but just hang in there and be patient because regardless of what happens today or tomorrow or next week or next month, it's not going to be the be all end all of where things end up. We've still got an entire adoption cycle. We still got a lot of penetration and adoption for the energy of Bitcoin, for decentralized platforms and all the utility tokens and everything that's yet to be created. So take a deep breath. Don't get too wrapped up in, is it a yay or a nay? It's going to happen. Focus on the rest of your life. You'll get the answer. And speaking of which, going into cycles, Lynn Alden, I was watching the interview, What Bitcoin Did with Peter McCormack this week, and they were touching on a lot of things, kind of the state of affairs. And one of the things that she touched on was the changes in this cycle with, I guess you could just generically call it institutional money. This is your Wall Street funds, your hedge funds. This is your family offices. This is your wealthy individuals. This is banks. This is banks that service wealthy individuals and company and family offices. This is your companies and their looking at balance sheet assets. These are individual companies, corporations. And she said there are two things. One, the small point was, well, actually, in this cycle, you're going to see a lot more. There's a higher probability of allocation happening, where in the previous cycle, you had the really innovative, early adopter, cutting edge type of people like Michael Saylor and MicroStrategy, who takes risks based on insights. And I think that will pay off for them. I think that, with the renewed upward cycle, MicroStrategy is making a lot more frequent acquisitions. They're swapping fiat for and derivative instruments of fiat, stock options, bonds, what have you, notes for Bitcoin, where they're buying it, they're having it put in a cold storage, and so it's the actual physical digital Bitcoin and not just derivative products. And back then in that last cycle, it was still uncertain. Bitcoin could not sell itself. A lot of the use cases weren't there. A lot of people hadn't been touched in a way where Bitcoin posed a viable solution for whatever it was their situation was. Now, 4 years later, 3 years later, we're in a situation where the world, the conditions, the seeds of Bitcoin have sprouted even further and grown into bigger plants. And more people this time around understand Bitcoin. They see it, both as a platform, the freedom tech, the things that Bitcoin enables and also prevents in human behavior and activity and interaction, but also as a derivative product just of price. When the price hits new all-time highs, and especially when it hits 6 digits, that's going to drive a lot of interest where people, the people I've been talking about, the full coiners, they're going to be jumping on board. They'll be driving up the price. There'll be the attention. But I think in this cycle, at least at this point in time, we're at a point where I think Bitcoin sells itself. If you are, a true maxi or a true believer, a true advocate, you don't have to advertise it. It is selling itself now. People know what Bitcoin is. People have heard of Bitcoin. They might have a vague idea of how it works, how it operates, if that, but they know about it. They know it exists. They know it's a digital thing. And with Bitcoin ETFs, it'll be investable. And when they start seeing that in their as an allocation in a 401 and a mutual fund, when they see it as part of a dedicated fund, when they see that the institution that they hold an investment account or IRA with or 401k begins promoting and advertising and offering this, it'll be in front of their faces. Bitcoin will sell itself. And that's encouraging. That's nice. It means that people like us who understand the freedom tech, who understand a little bit more of the nuts, bolts, and basics, our job gets a little bit easier because we don't have to sell Bitcoin. If anything, we might be known as the Bitcoin guy or the Bitcoin gal, or my Bitcoin friend. And if people have questions about how does it work, what's the value proposition, et cetera, and so forth, we get to do that, where it's no longer we're going to be going around going, dude, you got to buy some Bitcoin. Dude, you need to own some Bitcoin. Dude, you need to take self-custody. It'll be, oh, you want to know about self-custody? Oh, you're asking me if you should own some Bitcoin or just buy something like an ETF. Oh, you want to know, what the appeal of Bitcoin is. I think we're going to see that shift this time around, and the people who, have those networks, have those spaces, they're going to be getting a lot more interaction coming towards them versus the other way around. So that'll be an interesting shift. Speaking of institutional money, one thing I just remembered was I saw a headline on CoinDesk. Goldman Sachs is looking to get into the game as a custodial partner. I forget what the technical term is, like what Coinbase is doing, and BitGo, where they essentially act as sort of like the clearinghouse and handle the back-end mechanics for the ETFs as far as making sure the funds, the assets, everything's copacetic. Goldman Sachs is looking to get down in the game. It's simple incentives. This has been mentioned before. Just as something like a CBDC or a digital token payment platform that may involve stable coins, These companies see here is a place where money's flowing. How can we tap into that and siphon off some of that money onto our balance sheet, onto our quarterly reports, into our wallets? How can we monetize that? And this is one of those ways. So expect there to be more banks, more institutions trying to get in on the game and figure out how can they monetize this. Will we see a flood? I have no idea. A lot of trends that people saw back in the last cycle, the previous cycle, several cycles back, it takes time to unfold. You don't know what the future holds, how it'll unfold, what events will be, what laws will be, what the big macro picture is going to be. The only thing you know is that this is happening and there's movement in that direction. So you need to keep your eyes open for that and follow those things and see, does this trend develop? How can this affect me? Are there going to be risks where, one of the last big trends was crypto lending? Well, it turns out it wasn't so much lending as monetizing balance sheets as these companies try and get arbitrage on the best returns regardless of the risk. Look at your Celsius, look at your BlockFi, look at your Nexo, look at pretty much any company that offered that. I think Aber being the sole exception, where to my knowledge, they were the only outfit that was doing a self-funding thing. The yields were lower, but that was because it was a self-funding thing. So that had the lowest case of risk. But that was the big trend last time, which was monetizing through DeFi yields, monetizing through trying to scrape the best yields and get the most customers and get the biggest balance sheet. And through that practice, the risks showed themselves, everything fell apart, and we learned in a hard way what works, what doesn't, and understanding third-party risk. But at the same time, everyone who was directly touched by that and people connected to those people who were directly touched by that, we learned that lesson. It ain't happening again, because the next time we see it, we're calling it out. We're telling people, you can't do this. Hey, mom, dad, friend, whoever, don't put your money in this. This happened the last time around. It's risky. And they'll get called out. Also, too, we have more regulatory framework for disclosure, so there'll be tools in place to hopefully mitigate, catch these things, what have you. But also, too, we are smarter because of it, because we didn't offload the risk, because we shouldered the risk, because we bore the burden of it. We learned the lesson, the masses, not, well, we got government laws to protect us and these regulatory institutions. And, if we get hurt, we'll get bailed. No, we learned this. We're not having it anymore. So at least as far as the space goes, this time around, our bullshit detectors are primed and ready to go. And we're that much smarter to see what'll come up in this cycle as far as what are the different ways that banks, institutions, money outfits try and monetize it. So we're prepped. We may not catch everything, and we might get our asses handed to us again, but we're better armed and better educated. And that's part of the thing about being in this space, is learning and seeing these trends. Where are the risks? Where are the risk vectors? How can this affect me? How can I protect myself? Am I secure? So it's something to keep in mind, especially with institutional money and institutions getting involved, because if they can get away with something to scrape a buck, they're going to do it. They're going to do it. It's just human incentive. So I think that's going to wrap up pretty much everything on that really high climatic note. Is there something I could throw in to kind of sum things down? No, unfortunately, I don't have anything like that. But I will have, as always, the links for all the different websites where Tiny Crypto Blog is published. I'll have links to Matrix Money and Crypto Coin Mindset, Financial Failures, and Crypto Jar. And yes, be sure to check them out. Give them a peruse. And yeah, I will wrap things up there. Tune in on Tiny Crypto Blog, Twitter, Facebook for links to the videos of the week, the news of the week, where I share headlines, tweets, little bits and pieces, just so you can get, even if you just read through the headlines and take 2 minutes to do that, you get a summary and just a little notes about where things are at and what's going on in the space, and kind of get a feel for the weather outside. And with that, I will wrap up and say, be well, everyone. Talk to you soon.